All right. Back up my slide. Jerry, do you want to take charge of the slide?
I will. Give me just a second to find the right.
While he's doing that, hello everyone. Happy Wednesday. Welcome to the Multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles, and I am a commercial broker together with my husband, Jerry Miles, and we are the co-founder of Adventure Commercial Capital. Jerry, do you want to go ahead and take over?
I will.
I hope everybody's doing great. Let us know how you're doing in the chat.
All right. You can see my screen good?
Yes.
Yep, good. All right. Well, I am JJ, are you able to let people in, bud?
I am.
All right. Cool.
Yeah, I've been letting people in.
All righty. Hi, I'm Jerry Miles. Shelly just told you a little bit about who we are, the founders of Adventure Commercial Capital, and welcome to the Wednesday night financing Zoom with the Multifamily Freedom Chasers. Go into a little bit of today's agenda. First, we'll go into the community ecosystem and tell you a little bit about about the community and all the different things we got going on in the community. And then we'll do some introductions, let you know who we are, and tell you a little bit there, and then give you a chance to introduce yourself, and give you a chance to get known and let people know who you are. So we'll go into the current debt market, and then our main topic tonight is DSCR, and we'll be talking about what that is, what it means, and all that good stuff. And then we'll go into a question and answer at the end. And we'll try to keep the Zoom right at an hour. So I know it's a Wednesday evening and people have families and things, but you want to get your information, and we'll try to do it quickly and efficiently and get on through it. So the Multifamily Freedom Chasers community. There we go. Is my screen showing?
Yes.
Okay, good. All right, this is the Multifamily Freedom Chasers Zoom schedule. These are all educational Zooms, and everything is free. So, we've paid for a lot of mentorships and done a lot of different things in the real estate space. And I will say that the information and things that you get on here is just as good or better than any of the paid programs that we've been involved with. So we've paid as much as $40,000 for real estate education and networking and things, and it wasn't any better than this right here. So don't take it lightly or for granted. Come in and use it and use the resources. And so Sundays through Wednesdays, we have Zooms every night, 8 o'clock every night, except for every other Wednesday. We do 8:30 with the multifamily foundations. They go at 8:30 on their Wednesdays, and that'll be next Wednesday. And we do the off Wednesdays from them. But Sundays, the activation Zooms. Then we do broker talks on Mondays with Pete and Ed. Teaching you how to communicate and to build relationships with brokers. And then Tuesdays, you got napkin underwriting with Will, Aldo, and Ed. And so some high-level people teaching classes, and I want to encourage everybody to join in and be a part of them. So you're muted.
Okay, I apologize. So those of you who are part of the Freedom Chasers community, let us know. Put a 1 in the chat. And if you're new, put a 2. And you can join. All right, we got some new people. Hi, John. Oh, we got some old ones, Peter and JJ. I know them. Bridget. All right. So if you're new, JJ just shared a link in the chat. You guys can click that and be a part of the Facebook community, and you will get all the updates for all of the events, all those events that Jerry just shared. You guys will get all the updates for that. And another thing, for those of you who are new, and I know you guys already know who's been on here, these Zooms are just not for education. It's education and connection. So you guys go ahead and share your connections, your information, your emails, phone numbers, Facebook link, Instagram handle in the chat, and connect with each other. And we'll give you a minute here to come up and introduce yourself if you would like. So Jerry, go ahead. Sorry, I had to say that.
Yep. Yeah, that's me and my wife there, Jerry and Shelly, and then you see two of our boys there behind us, JJ and Jordan. We are commercial mortgage brokers. We lend on commercial real estate nationwide. We started this business at Venture Commercial Capital about 3 years ago. We've been in the construction business for over 20 years. Started buying houses and getting involved in real estate about 8 years ago. And through that process, we have been given the runaround and not treated fairly in things by commercial lenders. So that got us, searching and trying to figure out how can we, grow our real estate portfolio when we're running into all these crooks that are trying to take advantage of us. And so we found a company that set us up, in this business, made the connections with the lending sources and all those things. And we made the investment. We started this business 3 years ago, and now here we are, focused on commercial real estate and, primarily multifamily, self-storage, hotels. We can do a lot of different things. So like to give anyone who would want to the chance to come on and introduce yourself. We probably got time for two people to do about a minute each, if you'd like. Or wait, is that the?
That's hold off on the introductions. Go ahead and do this.
Okay. All right. So the Freedom Chasers community journey. This is something that they've put together to just kind of figure out where everybody's at. 3 different levels of no thanks, but thanks for the free education. Multifamily real estate is not for me. And then, passive investor, I love multifamily real estate. Maybe I don't have time. I don't, I've got a demanding career or business, and I want to be able to put my money into real estate, as a passive investor. And then, you can, take action as an active investor. You say, I love in real estate investing, and you start putting deals together, and and you say, hey, I'm ready to maybe join a paid mentorship. And through the Freedom Chasers, we have access to some really good mentorship programs, and you can also get a good discount things by going through the Freedom Chasers to sign up for these. You can find them on the Freedom Chasers. Is it the website, or is it the Facebook page where they have all this?
They have a website, but let's play the next video.
Okay. All right.
So there's the link right there.
Family, Freedom Chasers family, I have exciting news for you all. We are launching our Preferred Partners program for the community. You, as a community member, as a Freedom Chaser, have access to this right now for free. So what is the Preferred Partners program? It is a program designed when you are ready to accelerate your multifamily real estate journey. You are ready to invest in yourself, to level up your education and business building experience. This is the place to go. These are the partners and resources that we have invested into and we use hands-on that have helped us level up in our multifamily journey. So pretty cool. Our preferred partners that are a part of this list, it continues to grow, but right now they have over $2 billion of assets under management. Super cool. High level teams and high level operating individuals. So let me walk you through this here really quickly. We have Gabe Bowling's real estate training, Mastering Multifamily with Vina Jetty with her educational vault. Rockstar Capital and Robert Martinez, they have several different educational options. If you need mindset and performance coaching, we got Keston Glasgow with Purpose Ways. The Mary Machine, website, funnels, marketing, everything you need there. Self-directed retirement services with Horizon Trust, CRM, Underwriting multifamily course with Ken Gee himself. And then if you don't have the funding, but you're ready to accelerate your multifamily journey and invest in yourself and invest in your business, we have DSC Global Enterprises where you can get no interest funding to fund those type of investments. So take advantage of the Preferred Partners program of the Multifamily Freedom Chasers, and let's continue our chase for freedom together.
Awesome. Yeah, that is Trevor with the Freedom Boys, and I just shared the link for that in the chat. And if you guys want to take your journey to the next level, you can do that and get a discount.
All right. So who are you? And I see we got 2 hands up. We'll let you guys go ahead. It looks like you're on top of the list here, JJ.
Hello,
Hey, bud.
my name is JJ Miles. I do YouTube, which essentially means I just make videos and put them online and hope to get views. But I've studied a lot of it. I've learned what works and what doesn't work. I've blown up not really blown up, but I've done well on various channels. I've helped different people with their channels. I think last month we started a channel, and by the end of the month we had 50,000 views on the channel already. So, and I'm also doing my own channel that I have like 1,200 subscribers on. So that's just all I do is YouTube. So, and just try to get known on there. So yeah, it's me.
Awesome. Thanks, JJ. Hey, Peter.
Yep.
What's up, Peter?
How's it going? Good.
Good. So,
You're real quiet.
can you hear me?
Yeah, that's better. A little better.
I don't know why that is, but anyway, I was waiting for somebody else to raise their hand, but I guess you know, lead by example, right? So,
Yeah.
I am one of the leaders here in the multifamily community. I also like the Miles. I do lending, mostly fix and flip loans here in the Southeast on single family homes. But I also lead the broker outreach Zoom first and third Monday of every month. So if you haven't been on that call, come join us there. We'd love to have you. Shelly mentioned that, you know, this community is all about education. She mentioned something else that's slipping my mind right now, but the other thing is it's also about taking action. And that's what Monday night is all about, right? We get activated on Sunday night, and then we come back on Monday night and we take action. Now, we don't do it live anymore because we do it at 8 o'clock at night, but we'll do role playing, or we'll have, you know, we'll listen to a live call. And I think it's very helpful for people to hear these calls happen and then comment on them. And, you know, it's been the reaction has been very positive to it. So I look forward to, I know I've seen some of you on there before. I look forward to seeing some new faces on there as we go forward, and we appreciate you being here. And the other reason I raised my hand is to encourage you guys to raise your hand. Introduce yourself. Let us know who you are. Let us know what you do. We can't help you in your day job if you don't tell us what that day job is. But, you know, maybe you're in a business where we're all networkers, right? We're here networking on a Wednesday night. That's what we do. I can't refer anybody to you if you've never raised your hand and told me what you do. So I'd encourage you to do that, get known in these communities. Partnerships are formed all the time. And not even, it doesn't have to be a long-term partnership, right? Just deals happen within these groups, but you have to know the people in the group to do that. So just encourage you guys to participate, be active in the chats, raise your hand, ask questions, let us know who you are.
Absolutely.
Awesome, Peter. Thanks. Thanks for being here.
Yeah, we have time for two more if two more people want to jump on. Come on, guys, don't be shy.
Let's see, raised
There we
hand.
go. John's a first timer. Here
All
you,
right,
John.
John.
Welcome.
Thank you. I'm a first-time listener, first-time caller.
Awesome.
I'm a freedom chaser in my own way. So I'm drawn to your group here. It sounds like something I'm definitely interested in. During the day, I am a mortgage lender, residential. So I've been in the residential mortgage lending business for off and on about 15 years. And just about a little over a year, about a year ago, I became interested in multifamily. I went to a Grant Cardone conference, and it's a great networking event. I met a bunch of people there. I've stayed in contact with some. I became a regular on the Legends Equity multifamily group, and just trying to learn as much as possible. I'm in the Legends Equity multifamily mastermind group now. Trying to learn as much as possible. So this call was recommended to me for the lending piece of it, because I'm trying to learn how to underwrite deals, and so somebody from the group recommended this call.
Awesome. I'm glad you're here, John.
That's awesome.
Nice to meet everyone.
Nice to meet you. Kendra. Hello.
Good evening, everybody. Hi. My name is Keandra. I'm yeah, no, that's fine. I'm co-owner of EJK Construction Services. We are basically like a one-stop shop for all of your real estate development needs, from new development infrastructure, new builds, renovations, project management, and interior design. We are new to the Dallas market, but been doing this since 2010. We do both residential and commercial. And this chat was recommended to me because I was interested in the DSCR loans.
Awesome. Well, glad you're here.
And that
you.
is how you get known, guys. So Keandra, Peter, John, JJ, put your information in the chat so people can connect with you.
All right. Well,
Thank you, guys.
Yeah, thank you all. So we will get moving here. This is our contact info. So I want to encourage everybody to either take a screenshot, a picture, write it down, or you can always, if you scan that barcode right there, it'll take you to our website. But that is my cell phone number, and then mine and Shelly's email addresses. So I'll give you just a second for that, and then we'll move on. All right. So get started with the current debt market update. Where are the current rates? We've been kind of, with our agency, CMBS loans, those types of deals. We've been hovering around in the 6s and the 7s. Those are all based on the treasuries. The 10-year is at 4.25 today. It's been kind of inching up, goes back and forth, but have been inching up overall. Right now we have the highest Fed funds rate that we've had, I think, in 22 years. And SOFR, a lot of our bridge debt and things is based on the SOFR rate, which is the secured overnight financing rate that the banks trade at. So we started doing the current debt market update when the rates started kicking up. We started doing this every other week. And kind of the way it's happened the shock was the rates coming up. We might have another rate hike here coming in November is what everybody's saying. So, but they're expecting like a quarter point, something like that here come November, and then everybody's expecting it to kind of level out. Some people think that we're gonna drop way down again next year because of we're going to go into a recession, or some people are saying we're going to drop next year because we're going into an election season. And they want to make themselves look good by lowering rates and taking credit for things. Who knows? I say if you're underwriting deals right now, underwrite to what we got currently, and I wouldn't count on things getting better. Always prepare for the worst when you're underwriting deals, and they keep you from getting into trouble. So the real problem's already happened, and kind of right now what we're feeling is just the shock of that in the market. The market's really stagnant. I was talking to a broker on the phone today in LA, and I was sharing with him, we have, I think, one of the best development and new build programs for deals that are 20 million plus. I think we have the best program on the market right now, and so I've been really promoting it and reaching out to brokers that have development deals for sale. And he was real confrontational when we first started talking. He's like, "What do you mean? You think you can get this deal done?" He's like, "This deal isn't penciling out." And he said, "What is this lender going to do?" And he was just kind of aggravated, I guess, because he's not been able to close any deals, and he's got a lot of development land and things in LA that he's got that he's trying to sell, and he's having trouble with it. So but we're going to be looking at the deal for him, and trying to get something together for him on it. But who knows what the future holds. I know that we're going to be running into depends on who you watch and who you listen to on what kind of shape we're in. But I mean, we do have a housing shortage. So I saw where Warren Buffett has been investing in some of the big builders, some of the big name builders in the country. He's invested like 820 something million in single family home construction. So when you see guys like that who are always on the forefront of what's going good and investing in the right things, I would say that the building is going to be coming up here in the future. So, but only time will tell. So, what are the lenders saying and doing? They're getting tighter overall, and I think Peter can attest to that as well. Deals with short-term rentals and things like that attached are getting very hard to get done. A lot of lenders just don't want to even look at them if it's got anything odd to it. If it's an asset that doesn't fit the regular multifamily or an industrial or self-storage, those are still going well and can get funded. But other ones we're having troubles with. Unflagged hotels are getting really tough. So I am seeing borrowers getting less rate sensitive, and the shock of seeing a bridge loan with 10 or 11 or 12% was a hard thing to overcome 6 months ago, but people are starting to get used to it now. So, and that might just be where we kind of hang out and stay. So so this right here is the most up-to-date pricing we have on the small balance Freddie and Fannie loans. We can get you guys rates on a lot of different products. CMBS is what we use for hotels and self-storage. Fannie and Freddie on multifamily generally. We can do multifamily through CMBS as well, but they're going to be a half point higher, sometimes a full point higher on rate and things, and terms aren't going to be as good. But you can see the loan to value 80%. And we're doing the DSCR. We're talking about DSCR today. So I'll say here, just kind of start us off. When you see that 1.2 DSCR or 80%, they're going to look for that 1.2 first. So if they're saying they can lend 80% and a DSCR is a 1.15 or something like that, we're going to go down to probably a 75% leverage or a 70% leverage to get up over that 1.2. So I know a lot of people get confused on that. Well, you said you could do 80%. Well, we can, as long as we get the right DSCR to go with it. So so DSCR loans, debt service coverage ratio. We'll get on into the main topic. We're doing good on time. We should have a lot of time at the end here for question and answer. So you all start thinking of some questions so I don't sit here and talk to myself. So our main topic is DSCR loans, or debt service coverage ratio. So DSCR tells us how much extra cushion we need to have in our net operating income over the debt service or the annual loan payments. So a 1.25 debt service coverage ratio means the NOI needs to be 125% or 1.25 times the amount of the annual loan payments. So I know that the term DSCR loan has gotten to be a popular term, and a lot of people throw it around. And generally what people are talking about when they're talking about that is they're talking about your single family 1 to 4 units that you're buying and using as a rental. We use debt service coverage ratio to figure out that is what we use on all commercial real estate loans. That's what we have to get to on all of them, to be able to fund. So even business loans, the business needs to have a debt service to cover whatever debt that they're accruing in their business. So when you hear the word DSCR, it's been around forever, since banks and commercial real estate and things have been around and they've been lending on it. It's been there. And it's kind of gotten popular. The DSCR loan everybody wants to talk about. It's not a new thing. So in commercial real estate, we use a DSCR to figure out our if we can afford the property or if we can afford the loan and the property can pay for itself. With residential real estate, we use DTI, or debt to income, and they look at you personally to see if you can qualify for the loan. So, and that's the main difference between the commercial lending and the residential lending. So to calculate DSCR, if you're ever underwriting a property and you want to find out how much debt you can get on the property, so you're going to calculate your DSCR. You're going to divide the net operating income by the debt service, including principal and interest, and that will give you your DSCR. So let's take a multifamily property that had an NOI of 2 million. So NOI, just to go back, anybody that doesn't know, NOI is net operating income. So you take all the income that the property brings in and take away any regular expenses, taxes, insurance, management cost, maintenance, yard, snow removal, all these different things that you have on a property. And what you have left is your NOI, or your net operating income. And then you take your annual debt obligations. In this case, we're going to say that the debt obligations or 1.65 million. In that case, take the 2 million divided by the 1.65. That's going to give you a 1.21 DSCR. And then that difference there, the $350 difference is your cash flow. So, and then that's what you you take that cash flow, and that's what you use for
Yeah, and if you guys take your take your calculator out and do that on your calculator, you will see how he gets the 1.21 if you don't understand the DSCR. Because that's very important when you're underwriting a deal.
And I'll take it another step further here. We'll go with the I don't know if everybody can see my phone here.
Yes.
So if we have a property that has a $2 million NOI, let's talk about what that property would be worth. We can, you have a property that has a $2 million NOI. I can tell you what that property is going to be worth. A lot of it has to do with area and things like that as well. But right now, let's say we're in Cincinnati with this property, just kind of a middle-class neighborhood. We're going to be probably a 7.5 cap is what we'd want to buy this property for, or a 7 cap. So you take that $2 million NOI and you divide it by 0.07 for a 7 cap. So that property, that would be a $28 million property. So 28,571,000. And so how, and from there, you figure out, what if I take and I do 70% down. So then you would take that 28 million. I'll just take a 28 million even. Let's say we put 30% down times 0.3. That's 8.4 million down. That's the cash flow you would have to come up with. You would end up funding $19.6 million of that. Right now, I would say this $28 million property, we could get you probably a 6.2 interest rate is what we'll kind of go with. And we have different cut sheets and things that we can use to figure this out quicker. But I'll show you what I do. I'll do this if sometimes I'll get a phone call and I'm out and about at a ball game or whatever with the kids, and somebody will be asking me questions, and I try to just come up, I'll ask them, hey, what's your NOI? This is what we're going to be. So you take that. I'm going to go to Google and I'm going to type in mortgage calculator. Mortgage calculator, and it'll take you up to a page like this. Type in the loan amount. I think we said 19 million for the loan amount. 30-year, 6.2 interest rate. Your monthly payment is going to be $116,369. So go back to the calculator. 116,337 times 12. That gets us to 1.3 million that we have in debt payments. So, or we'll say 1.4. So we take that 2 million divided by 1.4. We're at a 1.4 DSCR coverage, or debt service coverage on that deal. So that's a 1.4. That would be, if you can find deals like that, putting 30% down, you're golden. So on that deal, we could probably go up to 80%, because we'd be at like probably a 1.3. It's 75 or 80% somewhere in there. So hopefully that helps everybody understand that a little bit better. If you run into a property that, let's say the let's say on this property, they're wanting 28 million and the NOI is only 1.6 million. And we get to a 1.1 DSCR with 70% down. We're going to have to go to like a 60 or a 55% down to, try to work the numbers out to where we can, where we would have our debt. So, and it might be a property at that point where you would have to turn around and say, maybe this isn't one that I should be looking at. So it works the same way with the smaller deals. If you're shopping for single families or 1 to 4s, you figure the DSCR out the same way. Take your taxes and insurance, your debt payments, take them all out of what your income is, and you're going to need to show 1.2 DSCR or better. So most lenders are a 1.2, depending on the area. If you're out away from a city, with Freddie and Fannie, they're going to limit you're in a lower population area, they're going to limit your DSCR to probably 1.3, or if you're in a higher crime area, they're going to limit your debt service to a 1.3. So a lot of nuances there with it, but hopefully that helps. And so open for question and answer. We'll do questions for about 10 minutes here.
If you guys have a question, go ahead and raise your digital hand, or you can put it in the chat if you don't like to speak like me. What is the cap rate in Georgia, Columbus?
I get the question a lot about the cap rate. Cap rate is a made up thing. It's whatever you want it to be when you're buying a deal, and it's whatever you want it to be when you're selling a deal. And, it's whatever you guys can come up with. I will say that most sellers are selling at a lower cap, trying to sell at a lower cap rate, a 4, 5, 6% cap rate. And, we're in Grant Cardone's real estate club. We're on a call with him every Wednesday at noon, where we're going down to be in person in a room with him at the end of the month here. We're going to be going over deals and all that with the real estate club. I know that he is buying deals in Florida, in nice areas, and up at the Destin area, he's got deals working. He's got deals working in Miami, and he's buying things down there right now in Class A areas. He's buying things at a six cap. So if you're in Columbus, Georgia, and you can buy something in Miami for a 6 cap, I wouldn't pay a 6 cap in Columbus, Georgia. I would probably be a 7.5 or 8 cap to buy something there. So hopefully that helps. If your interest rate is a 6.5 or 7%, you don't want your cap rate to be a 6 or a 6.5. You want your cap rate to be higher, and the number to be higher than what your interest rate is, or you get into what they call negative leverage. So hopefully that helps. In a lot of markets, to know what a going cap rate is in a lot of markets right now is kind of, you really can't figure that, because, as the interest rate has changed, we haven't had a lot of trading going on with properties. And so, to say, oh, well, that's in this area, this is what the cap rate should be. And it's not that way anymore. They used to be able to do that, a year or two ago, but, at this point we can't do that because there's just not a lot of trading going on. So. Go ahead.
Can a DSCR be refinanced if the rates go down?
Oh yeah, you can refinance just about anything. The problem you'll run into is most of the loans, commercial loans, you'll have a term on the loan. So you'll have either 5 or 10, sometimes 3, 7, 15 term on the loan. And a lot of these loans, if you're in a Freddie or Fannie loan and you got a 7-year term and you try to refinance in 3 years, you're going to have quite a bit of yield maintenance, they call it, but it's prepayment penalties. So to get out of that loan, these loans are sold on the market, and the investors that are buying these loans are expecting that return for that amount of time. So if you're trying to get out of the loan, they're going to want to recover all of their interest that they would have accrued during that time. So yes, you can always refinance things. But I would buy deals right now, that cash flow right now. And, if you feel like interest rates are going down, I would say, go after your 3 or 5 year term, and then you can refinance when the term is getting closer to the end, so you don't have as much of a prepayment penalty. If you think rates are going to kind of stay where they're at, lock in a nice, decent rate now. What you can do with the cash flows and lock it in for 10 years. So it's all a personal preference on that. But as far as refinancing commercial loans, there's always prepayment penalties. On a lot of the single family rentals or 1 to 4 rentals, they'll have what's called the 5, 4, 3, 2, 1. The first year you'll have 5% that you have to pay as a prepayment. Second year 4, third year 3. Sometimes they'll do 5, 5, 5, 3, 3, 1, 1. Just different things they do, but they're just trying to recover their money that they lost when you refinance out of that loan. So
Good. Hopefully that answers your question, Toby.
So yeah, you can always refinance. It's just a matter of, do you want to pay to do that? So
yeah. All right, guys, you can raise your hand, or you can unmute and talk, or you can put it in the chat. Now is your time.
So we'll still take questions, but I'm going to go ahead and go to the next page.
Okay.
If anybody has a question pop up, go ahead and ask it, and just raise your hand or put it in the chat, or just start talking. Interrupt me and start talking. That's fine too. So I get this a lot from people, so I put a slide out for it. Maybe you're not ready right now to be the big dog or the KP or a GP on a deal. But what can you do right now to get ready to be able to do that tomorrow? So, we say, the best time to plant a tree was 20 years ago. If you didn't plant it 20 years ago, you better plant it today, right? So what can you do today to start getting ready to be able to buy multifamily deals in the future? Number one, make sure your personal credit is in order. For CMBS is a little more lax on credit requirements, but if you're wanting to go Freddie and Fannie, or a lot of the smaller private lenders that are doing the single families and 1 to 4s and things, they're going to require a credit score of 660 or better most of the time. I know a lot of the gurus say, oh, my credit never gets checked and this and that. Well, they do look at your credit, and they're going to make sure that you don't have bankruptcies or open, bankruptcies don't stop from us from being able to lend to you. But we need to know about these things at the beginning. So if you have those kind of things out, if they're out and they're not closed up and things like that, they're still being in the works, then yeah, we're going to have troubles. But just getting your credit in order, whoever it is, if it's us that you're working with, that's great. Let us know the whole story when we start talking with you. And that way, we don't take it to a lender that is really hard on credit or whatever. And, we can take you to a lender that doesn't care about credit as much. So,
yeah. Can I give a quick tip on how to start cleaning up your credit?
I'm sorry?
Can I give a quick tip on how to start cleaning up your credit?
Yes, go ahead.
So you can go to freeannualcreditreport.com, and then you can download the 3 major credit bureaus: TransUnion, Equifax, and Experian. And when you go in there, guys, you'll see a lot of things that's probably not yours. 100% of the time, you're going to see something on there that is not yours. So go in there, and a quick tip to get your credit boost, maybe like 50 points or so, is make sure you eliminate as many addresses and names as possible. Your name is written 5 different ways, especially if you're married. It's probably written 7 different ways. So eliminate to the name you actually use. That helps the credit bureau. And also eliminate your old addresses because it has all kinds of past stuff on there you can eliminate. That's the stuff you can dispute immediately over the computer or just by a simple phone call. And that'll boost your credit score a little bit. So yeah, hopefully that helps.
Awesome. Yeah, thank you. I'm sure that helps somebody. So yeah, make sure your credit's in order. Start working on your PFS or SREO. PFS is personal financial statement. So that'll have your assets and your liabilities listed. You want to grow the assets. You know, and if you get that together and you start watching it on a regular basis, your assets are going to grow. If you don't pay attention to it, chances are it's not going to do anything. So just watching things and taking care of it helps a lot in those ways.
Can I interrupt one more?
I'm sorry.
There's a question in here.
Yeah.
Do you have recommendation of who to work with on a DSCR loan?
Yeah, I mean, you work with us. That's why we're here. So
Yep.
we'll put up our contact info here again in just a minute. So
JJ, if you want to go ahead and put up the contact info in the chat so they can grab it there as well. Thank you. There we go. That was quick.
yeah. So work on your PFS and SREOs, your schedule of real estate owned. Start getting your bio together. You're on these calls now. You're educating yourself. Put that in your bio. You're part of the Multifamily Freedom Chasers, and you're part of this. Is your part of your education. Put that in your bio. Start working on raising capital or making more money. We have a referral program. If anybody wants to know more information about our referral program, reach out to us. We pay out checks that to people who introduce us to people. So all we need is an introduction, and we'll take care of it from there, and we can get you paid on the deal if we close a deal with the borrower. So reach out to us separate with that. We'll be doing another Zoom probably next month sometime on the referral program. I don't think we'll get one out this month. It's been a pretty busy month, so needed for a quote. You want to, if you're shopping for a multifamily, these are the things that we'll need. Or if you're shopping for self-storage or hotel, these are the types of things we'll need. Not a rent roll in a hotel, but the T12 and income statement and things. T12, or it's a trailing 12, and it's just the income and expense report from the property. The rent roll shows the rental the list of tenants and what they pay and all that kind of thing. OM is helpful. If you have that, send that along with it, and that'll give us all the information on the property, location, all that kind of stuff. A summary of what you plan to do with the property. If you've done underwriting on the property yourself, if you can send that to us, that is very helpful as well, so we know where you're coming from on the property. And then as we get closer on the deal, there's some new people on here, so I'll say this, others have heard it a lot. If you're wanting to buy a multifamily deal or any type of commercial real estate, and that property that we just looked at, I kind of made up numbers for before. $28 million purchase, $19 million in debt on the property. So you would get a loan for $19 million on that property. That $19 million loan needs to be backed up by a sponsor, a KP, a GP. There's a lot of different names for them, but there needs to be somebody on the deal that has a net worth equal to or greater than that loan amount. And also experience, trackable experience that we can look at and the lender's going to feel comfortable with. To be able to get a deal done, that's what you need. I don't know if we have anybody on here right now that is, here looking to KP deals and stuff. The last time we did this call, we had several guys. One said that they can KP deals up to, I think, 16 million. We had another one that I know can KP up to 50 million, at least 50. I know that for sure. So there's people on these calls that you can connect with to help you get your real estate purchased and get your loans done and things like that. So that's why it's important to reach out to people. You see somebody putting their number in the chat, say take their number down and set up a phone call with them. So our next topic is going to be CMBS loans, but it is not going to be the 27th. I'm going to be on a flight at that time, going to Miami for our real estate club meetings down there on the 28th and 29th. So we will not be doing that Zoom. I'm not sure. I haven't talked to the Freedom Boys to see if anybody's wanting to take this and do a special Zoom or anything that night. But our next Zoom will be October 11th, and we'll be talking about CMBS loans, and that is commercial mortgage-backed securities. And so there's a lot of different things you can do with CMBS loans, a lot of interesting stuff. So here's our contact info again. Go ahead and take that down if you haven't.
And while that is up, I want to let everybody know that my niece is here with me. Tomorrow will make it 2 weeks. She's been in the United States for the first time. If everybody can say hi to her. Her name is Amy. I think she's on the call, or she was. Hi, Amy. Yeah. You can turn your video on, Amy, so we can see you. Hi, Amy. She's downstairs.
Hello, everyone.
She is from Trinidad and Tobago. That's where I am originally from.
So she is excited and happy to be here in the U.S. So, and she'd applied several times to come here and been turned down to be able to come to the U.S. And thank the Lord she was able to get her paperwork done, and she's now here with us. So
yeah.
So go ahead, Peter. What's up, man?
So I just wanted to make a point because I met you in the multifamily world, and maybe some of the other folks on the call did as well. So when I think of Jerry Miles, I think of commercial loans and bigger deals.
Yeah.
But if somebody needs a DSCR loan on a single family home, you're still the guy to call, right?
Yeah, we can take care of them.
Yeah. So I actually have a client who has a deal in Florida that she needs to get out of a hard money loan on it.
Okay.
And she was just asked me yesterday, where's the best place to take it? And of course, I said Jerry Miles. So I'll get you guys connected tomorrow and get the paperwork rolling on that deal.
Sounds good. And I sent you an email this morning with another quote on another deal. So
I know we're gonna do a deal. I got more to send to you, so we are definitely gonna close something here. I know we've tried a lot, but we're gonna make it happen.
Let's do it, man. Sounds
Awesome.
good. I appreciate you, Peter.
You bet. Thank you.
All right. So there's our contact info one last time. Reach out. Don't be shy. And join these calls. Sundays at 8, Mondays at 8, Tuesdays at 8, alternating Wednesdays at 8 and then 8:30. Next Wednesday will be 8:30. So, and get on these calls, make yourself known.
Yeah, JJ just shared the link again on the chat. I appreciate everybody showing up today. Thank you guys. Join those calls. You'll get educated for free. And have a good night.